99% of traders think that with a very high win rate, they will be able to succeed in trading. Unfortunately, the reality is telling you something completely different. So what does the reality check shows us? A reality check would show us that running a system with a very high win rate or somehow high win rate will be very hard to maintain. I just spoke to a trader and he was complaining that he's like, I'm having 65% win rate and I cannot still make it as a trader. And I feel for this guy. In all honesty, there are so many traders that are in his shoes, traders that are trying to achieve 60, 70 or 80% win rate and are wondering why they're not able to make it in trading. And if you really want to succeed as traders, you need to take into consideration statistics, guys. Statistics are showing us that if you are running a trade to reach 1 to 2 or 1 to 3 even risk to reward ratio, you probably will need very high win rate. What does this mean? If you have a very high win rate, this means you're going to be trying to execute a lot of trades. You'll be put under tremendous amount of stress. And also, you will be most likely underperforming at some point because each and every strategy goes through a losing streak. When this happens, you would tend to overtrade. When this happens, you will start underperforming. A system with a very high risk to reward ratio on the other side is flipping the script. So how is such a system able to flip the script, guys? I will show you exactly how. And here is a trade I took 3 hours ago, guys. And this is a NASDAQ trade. Currently, this trade is giving me 24 to 1 or 1 to 24 risk to reward ratio. So basically, currently I'm risking less than 5K and I'm making 112, which gives me a very, very steady return. And how is this able to outperform a regular high win rate system? So it's very simple. If you look at it this way, you only need to take one trade like that to basically make up for the whole month, especially if you're taking a small number of trades. Because what are the chances of having 24 losses in a row? Of course, it can happen, but the chances are very slim. On the other hand, if you're running a system that gives you 1 to 2 risk to reward ratio, you need to take 12 consecutive winning rate. So this is basically 100% win rates in order to match this type of performance. And I can tell you that this is close to impossible. If you know another person who is able to do that, I'm very happy that you can give me a link in the comments below. But having been doing this for so many years, I can tell you this is very, very hard. And let's look at the other trade, guys. This morning, I took 2 trades. So one was NASDAQ or QQQ, and the other one was Germany 30 or DAX. I've already closed this trade at 1 to 11 risk to reward ratio. This is just before closing the trade. And these were 2 trades taken simultaneously, almost a couple of minutes apart from each other. This was the place where we took the NASDAQ trade. I only risked 6 points on this trade. This was where we took the DAX trade, and I only risked 12 points on this trade. So this trade has already been closed. It's in the history, but my NASDAQ trade is still running. So what is enabling me to get into those trades? As the majority of you that have already taken the day trading program know that I'm using pricing discrepancies, and pricing discrepancies in trading refers to situations where the same or similar asset is priced differently across markets, brokers, or instruments. There are different definitions for pricing discrepancies, like it could be timing differences, liquidity differences, this could be delayed data feeds or human or algorithmic errors. This could also be different supply-demand conditions, and we are using a specific pricing discrepancy, which actually we are using 27 different pricing discrepancies, which are helping us to evaluate the market and give us a very precise entry points based on those discrepancies that are enabling us to limit our down exposure or to cap our downside and to give us in small fraction of the times uncapped earning potential. So what does those pricing discrepancies look like in real time, guys? So imagine we are finding one of those pricing discrepancies. We have very tight stop losses. So if the price hits our stop loss, we're going to lose a very small amount since, as I said, they're very capped. So we use very tight stop losses. On the other hand, if the price goes in our direction, we might end up with a double digits or DD, as we call them, trade. Those trades, they're trades that are giving us over 10x's or 1 to 10 risk to reward ratio. And do we have any way to predict if pricing discrepancy will turn into a double digit returning trade? There is no such way. I mean, we don't predict the markets, guys. We are running this as a business. If you're trying to predict a market direction, you're doomed to fail. There are lots of traders, I would say the majority, over 99% of traders, they're using all sorts of methods, from the first 5 or 15-minute breakout strategy to purely supply and demands with no other confluences, to indicators. Indicators are probably the worst in my eyes, but they all try to predict the market direction. What we do differently and what traders should be doing is, first, to look at trading as a business, then second, to have a working trading edge, which consistently can give them and find them such asymmetrical trading opportunities, which can basically let you test the market and risk very small amounts, and on the upside have uncapped potential, just like the trade I've just shown you. Now compare these guys with the typical system that a day trader is using. So this will be using a stop loss, but then also limiting your upside potential. So most down traders, they're looking for 1-to-2 or 1-to-1 risk to reward ratio. In the best case scenario, they'll be looking for 1-to-3, which basically is, first of all, limiting their upside potential, and second of all, and most importantly, the moment that they're in a good trade and they need to literally load the truck and make as much money as possible, they're limiting their returns to 1-to-1 or 1-to-2, which does not give them any trading edge. Even on a very high win rate, this is actually a recipe for disaster, because how many trades you need to take in order to match a 20x or 30x trade, guys? You tell me. Now, I don't want to sound like one of those know-it-all guys, but the reality is, I've spent the last 10 years working with traders, and I've seen so many trading strategies over the course of my trading career that 1-to-1 or 1-to-2 simply won't float the boat, guys. This won't give you enough of a trading edge for you to cross the bridge from a break-even to a consistently profitable trader. You need some consistent trading edge. Now, don't get me wrong, this is not the holy grail of trading strategies, but at least this system gives you a trading edge. And without the trading edge and a roadmap, you won't be able to cross the bridge between somehow profitable trader to a consistently profitable trader. You need something stronger, guys.